Hey, maybe if I turn my mic on, that'll be better, huh? I was screaming and yelling at the top of my voice, and you still couldn't hear me. Hey, Ryan asked, oil supply at lowest levels. Well, okay, I think you might be misinterpreting the data. What I think you're reading, and I did read the same a few days ago, actually. I think I read it on Friday. There's a new product, a relatively new product, traded on the exchanges, and it has to do with futures used to hedge oil supply, like literally a tank. Okay. Now, when you have, I don't know, $100 million worth of oil, and you need to put it in storage, these are very long-term contracts. And you face a lot of risk because, things can change over the course of time. And that data wasn't really available because if you negotiated a deal with a storage company, you want to keep it hush-hush so that everyone else doesn't know what deal you got. But what if other people got good deals? You wouldn't know because that wasn't publicly published publicly, right? Wasn't publicly available data is what I wanted to say. And so anyways, time goes by, the market becomes more mature, and there were futures contracts designed to hedge against that long-term risk. And if you look at the changes in pricing of futures data on the storage contract, that's just started coming down. So maybe if you want to interpret it that way, maybe that's the bottom for oil. Oil's up today. But anyways, kudos for noticing that. And did anybody see iron ore today? Yeah, Marinas is down, not done. Well, that's probably the wise thing. But it's the beginning, though, maybe, right? Yeah, iron ore is up 20%. Today, I meant like this. Today, just today. Today's going to be the day that I'm going to come back to you, right? That's a big day. Imagine if gold jumped $200 in a day. That's what happened to iron ore. So maybe, just maybe, you start stringing these pearls together, and you say, well, people are not buying hedging insurance, basically, to hedge against oil storage because they don't need any more storage. Maybe, maybe that's it. Maybe that's the beginning of a top in storage, otherwise known as a bottom in oil prices. Iron ore is going up. Gold is up 20% this year. Maybe, just maybe, this is the beginning of your opportunity to consider adding commodity and commodity currencies back into your portfolio. Because now you have something to actually talk about, right? Versus speculation and conjecture, you can say, well, maybe we don't actually have all the things there, but the things that should be there for us to discuss a bottom in price are starting to happen, so now it's time to tiptoe. Okay? Right? Maybe a bottom in iron ore, maybe a bottom in coal, maybe a bottom in oil, maybe, these types of things. At least now we can actually, based on some sort of evidence, maybe it's weak evidence, maybe it's strong evidence, I don't know. But that would be your alpha, right? Your ability to read the market and outperform everybody else, right? So anyways, it's Monday, the 7th of March, 2016. Let's clean up the place and then get to work, huh? So I don't know what you read, Ryan, but that's what I'm guessing. So, welcome to Forex.Today. See, look, live video. Hello. Welcome, everybody. Let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hang on. Today's gonna be the day that I'm gonna come back to you. By now, you should have somehow realized what you got to do. You know what I saw today over the weekend? Saw an ad for a 55-inch 4K TV for $650. Oh, that's good, right? A 55-inch 4K? I'm like, I should probably tear all these monitors down and just have 6 of those. Isn't that redonkulous? Like, that's kind of cheap. I mean, actually, $600 for a 55-inch 1080p is pretty decent. But for a 4K, slap me again. Yeah. So I was thinking, I could have 6 of those instead of 18 of these, but I don't know, whatever. Hey, good morning. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that gives you access to the foreign exchange market. We also have energies and metals and indices for you to trade. We're an ECN, so we enter it directly. We don't take trades against you. Our spreads are low. Our customer service is awesome. Swing on by and open up a demo account. Tell them what Wayne sent you. Okay. Oh, question, VAR versus ECN account. Okay, good. All right, Ryan asked you a really astute question. Great. I can give you my opinion. Okay, ECN's great. Okay, and maybe I'm just super old school, but I prefer a VAR, which is a variable. It's a hybrid model, if you will, between getting a great price, but also knowing that your spread can't jump like this on news, because that's what would actually happen in the interbanking system. Let's say right before NFP, you can get jumps in spread. That's not us. That's the actual interbanking system. That's what the liquidity providers are doing. Okay, JP Morgan might not want you trading 5 seconds before NFP, because they probably pulled the plug and stopped trading, and that's where spreads come from, right? No one wants to take the other side of your NFP trade, right? So a variable is a bit of a hybrid where you get good prices, in fact, most of the time great prices. But in those scenarios where you get big spikes, and again, not us, that's just the interbanking market. So when the market jumps in spread, the variable keeps it within that window. Okay, so whatever the max window is, I don't know, but it's your spreads are kind of going like this with the interbanking system, but it never goes like this. And I don't know, so I'm old school. I like that. I just like that. I like to know all the time, and I don't know. Most people I think would go with ECN, and that's probably the right thing. But just me personally, variable is good with me, because I just know it's there, and it makes me feel good. I always know what the spread is, and I never have to worry about spreads knocking me out of trades right before news. Because imagine, let's say you're in a trade, and then right before news, the spreads come like that for 1 second. Well, that might knock you out of your trade. So, and then Ryan says, you see, VAR gives you different stock markets, and there's no commissions charged. Okay, see, I don't, yeah. See, what's the difference between a commission and a spread fee? I mean, to me, either way, you pay money, right? So, so maybe and if that does See, for example, so I wasn't aware of that, but if the VAR account gives you access to things like the Nikkei, where an ECN account wouldn't, then I would certainly go with the VAR. Because even if I don't trade Nikkei, I do want to see it. What? Okay. Well, Nick asks, how do you know TradersWay won't blow up? Well, you know what? FXCM, the largest retail forex broker in the world, basically blew up on the Swiss National Bank debacle. And Drew Niv walked to work that morning, walked into his 15-year-old company, leader of the industry, and I'm sure the CFO sat down and said, "Guess what? The stupid Swiss National Bank lied to us, and your company's bankrupt. You need $500 million, and you need it by the end of the day, or we fold." Can you imagine Drew Niv with his latte? What? Oh yeah, you're dead broke. Your company's worthless. You need $500 million now. Don't! Well, what happens? What happened to TradersWay? Nothing. Because, the ECN model means that we're not carrying the other side and stuff, so I don't know. They got the loan, though, basically from loan sharks. So long story short, TradersWay was just absolutely, totally fine. And some others went out of business. Holy smokes, right? Cool. All right, so not a lot going on this Monday. Didn't really know what to say about Asia. We got the big Chinese meeting going where they do their planning and their discussions and so on and so forth, creating their budgets and their outlooks. And I think it's really interesting that it happened so close to the G20. Very, very interesting. Both Mark and Ryan say they're good experience with TradersWay. Cool, right on. Right on. That's what I said. We got great customer service, and no drama on the trading, right? Execution stuff. So anyways, so out of these meetings, some surprises, of course, and I suppose in a good way. They're doing things like setting their targets for like almost 7% again. Where the Western world is talking about the new normal in China being more like 5%. They're back to the old 7%. So it makes you wonder, well, what are they going to do? What's the government going to do, right, to get 7%? Well, maybe they do something, and it is seen as ambitious. Okay. So their outlook for inflation is 3%. Even though it's less than that now, right? So where's that inflation going to come from, right? So anyways, their outlook is basically up is the message here, right? Is it possible? Is it ambitious? Is it even foolhardy? Is it naive? Is it all these different things? Who cares? If the government feels good, then that's good. If they want up and they're willing to spend it, that's good. So I'd rather them be optimistic than pessimistic, right? If they said, well, this is the end of the world and it's all collapsing, it's all over, we're going to go back to full-on socialism and communism. Whoa, that would be bad. No, they're like, no, everything's good. We just need to do some stuff. We'll fix this, right? We'll fix this. We'll make 7% GDP. Good. Oh, Horace says TradersWay is the best broker ever. Right on, Horace. Cool. So anyways, China's saying up. Maybe that's why things like I don't know, iron ore jumped 20% today. Could that be it? Could that be the reason? Maybe. Who sells iron ore to China? Australia. Oh, look at that. Right? For the last 2 hours straight, Australian dollars straight up. Rocket ship. off the 4-hour 21. What? So anyways, and then the People's Bank of China, they're talking about flexibility, proactive, get the job done. Okay, it's all positive. Even if it's probably not likely, it's still positive, right? Then what happened in Europe? Nothing really, right? So some German factory orders, big number year over year. Okay, great. Well, Germany is doing fine, but remember, the monetary policy isn't about Germany, right? The monetary policy is about every other country in Europe. So maybe one day Germany does get hit by inflation, but year-over-year number pretty good, but there still isn't spectacular stuff going on there. Eurozone investor confidence, whatever, but it is the lowest for a while. Who cares? And then here's what I thought. This did come out in the European session, even though it's related to Asia. Kuroda at the Bank of Japan reiterated their view, right? They're not thinking of taking more policy steps at this time. What? Sucks, right? What does that mean? Are they going to remember? We're only what's the Thursday's the 10th, so Friday they're expected to make the negative. I never know how to say this. My brain just doesn't work this way. How do you increase the negative interest rate? You can't decrease the negative interest rate because it means less. So increase the negative. Increase the negative. Make the negative bigger. I don't know. Increase the negative interest rate. I think maybe right? But he's saying the week before, or Monday before their meeting, that they're not going to take more steps. Well, that kind of messes things up, doesn't it? So if you saw some strong yen today, that's probably why. And then what's going on today in America? And nothing. Baltic Dry Index, great. Swiss, I love this. The Swiss government, question time. Doesn't it sound like kindergarten? All right, everyone gather around, little Swiss National Bank executives. Everyone sit it down. Okay, guess what? It's question time in Parliament. Woo! And then cookies and milk. So, question time in Parliament. Okay, so great. The Euro area finance ministers, right? The Finmins, they're going to meet in Brussels and have some muscles. Right? Then they're going to go have lattes in Bruges. Or is it macchiatos? I can't remember. Well, Rick, I said maybe. Okay? Based on that. So Rick says yen's weak today, not strong. Oh, whoa. I know. But that news in particular to the yen is not weak. What it's saying is no additional easing policy, no additional QE, let's say, no negative interest rate increases. And that's just not yen weakness. Okay? Now, if you look at your yen pairs, if you see in particular commodity currencies going up, it has nothing to do with the yen. Okay? If you look at USD yen today, I'd suggest today it's more down than up. But if you're looking against Aussie yen, well, that just skyrocketed in the last couple of hours, but that's probably related to commodities. Okay? So it's probably more Aussie than it is yen. So, okay, just whoa. Hey now. Okay, so yeah, NAB, Fisher. Okay, great. Well, people watch Fisher, so, I don't know, pay a little attention. Mexican Con, great. And then today, in the Asian session, RBA speech, Amazing, right? And then Japanese GDP. Yay! Right? Expecting negative 1.5. Okay. Great. Well, let's play the happy music, and then we'll go through Commitment of Traders report and go through the calendar and do some charts and call it a day. Here comes the happy music. Forex.Today. Happy, wealthy, and wise. All right, so you should see my charts. Let me pop open the site. All right, hang on. Let's go with the calendar. I turned my drawing tool off. Okay, so if you ever want to use the calendar, just go to the top of the screen and use the calendar. I like to filter these things. So do 3 stars only, just do that and then hide the filter. Okay, great. Is that today? No, that's way off. See, look at that. Way out to March 9th. So pretty quiet week all the way to the 9th. UK industrial production and manufacturing data. All right, well, we want to know if that part of their economy is chugging along. Remember, we're hoping to start to see better data out of the UK. And by the way, what has Mark Carney been saying about the UK economy for the last year and a half? He's been saying, you know, it's not bad. He says it's pretty good. And then the inflation data comes out and it's pathetic. Horrible. First of all, it was disinflation, then deflation. And Mark Carney keeps saying, don't worry about it. Don't worry about it, huh? Right? That's the Canadian accent. Don't worry about it. And so why are the numbers so bad? And he's like, it's just commodity prices. It's oil prices. It has nothing to do with the UK economy. All right, so Saudi Arabia and the United States and Iran and Iraq and Venezuela and Azerbaijan and Russia, they're flooding the market with oil and it's oversupplied. What does that have to do with the UK? Well, maybe they could shut down Brent, right? And good luck, right? No one wants to do that. So, but he's like, you strip that out and we're probably pretty good. Don't worry about it, huh? So what happens if oil drops all the way down to 25, right, which it did. So oil, let's say, drops 75%. Wow, bad number. Inflation data goes down. UK looks bad, right? So then oil goes from 25 to 50. What happens? Oil just went up 100%. What happens to inflation when commodity prices double in, let's say, 6 months? What's the inflation data going to say? Skyrocket! Well, we're only half of what we used to be. You see what I mean? It doesn't say, well, it's only $50 a barrel. It doesn't say that. It says up 100%, but it's still down 50% from what it was. Right? Financial engineering, huh? So anyways, all of a sudden we might start to see some inflation in places like the UK and the United States and all that kind of stuff, right? So that's why people want to see a bottom in commodities. So anyways, so we'll see how things impact their industrial production and manufacturing data. And then in Canada, interest rate decision, whoop, whoop, whoop. Nice. Probably not going to jack up interest rates, huh? So we'll see what they do there. And then New Zealand's going to do the same. There's a little silent whoop whoop. They're not going to raise interest rates, right? They're going to cut interest rates. Holy smokes, eh? Really? What do you think? What do you think? Is New Zealand going to cut? No change, huh? No change. That's the easy call, of course. Gold up 20%, so that's good for Australia. Dairy price is not up 20%, so anyways. We'll see. Probably nothing or a cut. Okay? No way Australia will cut, but maybe RBNZ. Why not? Chinese CPI. Should we trade this, guys? Yeah, why not? Yeah, you're right, right? Yeah. Aussie Kiwi Long, it wouldn't be absurd to consider looking at that. Okay, so anyways, Chinese CPI, yeah. Remember, they're talking 3% or something like that? Well, the CPI is 1.8. Good luck, China, right? And then, I don't know, should we pay attention to Thursday's ECB meeting? Interest rate decision, policy announcement, press conference. Yeah. Right? That could be interesting, right? Cool. Later that day, Governor Pelosi at the Bank of Canada is going to speak. Cool. Canadian jobs, right? Look at what a great end of the week, right? Consumer sentiment, and then Chinese industrial production. What a great week, huh? It starts out really thin, and remember what's got people's mind, right? What people are focused on is this. Okay? But there's some good things in here, right? Besides that, just little things like monetary policy out of Canada, monetary policy out of New Zealand, Canadian jobs report, right? Chinese industrial production and Chinese inflation. Are you kidding me? Did you rub my lamp? Right? This is good stuff, man. This is a nice week, and they're spread out. So Thursday and Friday is going to be huge, but then there's also Wednesday. Wednesday, Thursday, Friday. So why don't we just take Monday and Tuesday off? We should be in the Caribbean. Right? You guys want to meet up in the Bahamas? We'll do a conference at the Great Cliff Hotel. Right? Play some golf. The restaurant there is fabulous. They have the second largest private collection of wine in the world, where I actually held the oldest bottle of wine in the world. And they roll their own cigars. Ooh, yeah. Yeah, love the Great. I love me at the Great Cliff. You should be there with me. All right, COT. Oh, Anthony, you can do the Bahamas, huh? You won't do Dubai, but Bahamas is fine. All right, so let's start with the euro. Okay. A little increase in shorts and a decrease in longs. Huh. Yeah. By the way, if someone was thinking about doing the Dubai event with me, but let's say you don't have a stack of cash, and you're like, man, I can't stay at the Ritz-Carlton. Um, the marina, the Dubai Marina has, I'm not joking, 30 or 40 hotels, many of which are extremely high end. The Ritz-Carlton's probably not even that nice compared to some of the other hotels. But there are more affordable hotels, and if you find a hotel in Dubai that's more than 5 or 6 years old, it'd be amazing. So I'm telling you, for $100 a night, you can find a nice, clean, modern, new hotel. Um, you don't need the big cash. So but I'll host the event. I'll even buy you lunch. We'll do a little mixer after. So I want to see you guys there. So, anyways, people shorting, less people longing. That brings the Euro USD down, right? Look at that change on net, and what you're looking at is the black line here. Sharp drop net, right? Less bulls, more bears. Could be very interesting. Get out of here, add. Boop, boop. All right. Piggy, 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 can't you see? All right, well, it's been down, 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 down. A month of holding their breath, and blah. Okay, what is this? A few more people going long, a lot more people going short, which means to me a bit of choppiness at the moment. Got to be careful when some people are buying and some people are selling. Can lead to choppiness, but when you look at the technicals, like shorting the pig dog today at the right level makes a lot of sense to me. And we might have actually covered that in NFP on Friday. Okay, when you add technicals to this, but my worry is it goes down, 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 up, 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 down, 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 up, 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 up. So what I'd like to see is less bears, more bulls, or more bulls and less bears, or whatever. But there are more bears than bulls at the moment. That's what matters, right? And remember, it's not opinion, it's money. These are actually the number of contracts short, speculative contracts short, not hedgers. Okay, let's try to figure this one out. This is the Japanese yen. And net change, right? You see that? Less people short, a tiny bit more people long. Net change, just slightly more bears. Or bulls, I should say. Slightly more bulls, which brings the USD yen down because the yen is slightly stronger than it was week over week. Big drop, huh? Question is, will it roll over and head on up? Now, if you recall, what was it, about 3 weeks ago? I said to start tiptoeing into the yen longs. And I was long, I think I was long Aussie yen, Kiwi yen, and CAD yen. Do you guys remember that? About 3 weeks ago, there were double bottoms with Stochastic cycles. They're all, yeah, they're all up since then, right? Got 300 on one, I think 100 on another, and then for some reason, I went long Kiwi yen, and I still can't figure it out, but somehow I got knocked out. So got basically nothing out of it. All right, so anyways, let's take a look at Aussie. Have we turned a corner? Well, the black line is big increase in net longs, right? So let's see what's really happening here. The red, the orangish kind of line, those are short positions. So going back to the beginning of the year, less shorts, less shorts, less shorts, less shorts. At the same time, the gray line are long contracts. More longs, more longs, more longs, more longs, more longs. The change in net positions is much more bullish, right? We get to neutral and then actually rising, actually bullish. There are more bulls in the market, not just changing contracts, but the market is actually bullish. Aussie dollar versus US dollar. And you see this here. That's the zero line. So when you're above, which what I'm looking at, guys, is this area here. When you're above that line, the market is bullish. And the trend has been from here to here over the, since this third week of January. Okay? So that's Aussie. Coolio, huh? Kiwi. Okay, let me show you the water line here. Still fundamentally bearish, which is different from the Aussie, right? Isn't it interesting that New Zealand pays 2.5% and yet it's weaker than a currency that pays 2%? So it's not all interest rate differentials, right? So slight trend up in bulls, actually fairly decent drop in bears. The trend here over the last several weeks is actually trying to move back up. Okay, so maybe a bottom. Well, let's see what happens. Okay, if New Zealand cuts interest rates, this probably will come down. Okay, and so we'll pay attention here. But you could be building up positions, buying dips, jamming stops, right? Remember how I've been talking about building portfolios? Buying some dips, jamming some stops, and don't worry about the rest. A lot of people get caught up like the risk reward ratio. They want to risk 20 pips to make 50 pips. Maybe 100 pips, right? Well, every once in a while, what you need to say is, I'm just going to simply buy this dip. It's going to be a good entry. I'm going to enter it just like my normal 50 pip winners. But I'm going to jam the stop and never look back. Set it and forget it. Like literally, what I've taught some people is to open up a trading account and say, this account will only carry trade. And what you do is you buy some positions, put your stops where you want them, shut your charts down, and you don't look at them for a week. A week later, you should be up on all trades, right? If they're good trades. Move all the stops to break even. Maybe lock in a small profit to pay for your time, and then get some other trades. Shut the account, shut your MT4 down. Don't look at it again for another week. Don't even look at it. That's why you need a separate account. Just log in and say Aussie yen, CAD yen, Kiwi yen, stop. Shut your charts down. Yeah, I think if you're willing to try it, you might actually be a better trader when you're not looking at your charts. Wouldn't that be interesting? Well, how would you know if you don't try? If you don't test, right? I constantly try and test things I don't like to see if I could possibly learn something. And if it doesn't work out, then I just reinforce why I don't like it. And then we'll end the day with kitty cat. Kitty cat, kitty cat. Remember, we got lots of news at the end of the week. Well, we got their interest rate decision, right? And we have Canadian jobs report. Cool. Which is nice because they usually overlap it on NFP. So that's really nice. So net change becoming more and more bullish, but nowhere near the water line, right? So what's going on here? These are short positions, a lot less people short, okay? And no one really buying. But the negative sentiment has really changed, right? So you might say, if you look at the 4 hour right now in USD CAD and you say, well, the bearish sentiment is waning and the Canadian dollar's been bearish all day, maybe you should sell the sucker at the 4 hour 21. Okay. So let me check that. I need a 30-second break. I've had 9 cups of coffee today, so sorry about that. I'll be right back. 30 seconds. Life of a currency trader, huh? 9 cups of coffee. And the sun just came up. Ah. Yeah. Bladder buster. Ah, come on, Nick. All right, cool. All right. Oh, yeah. I want to start with Kitty Cat. Commodities are going up. Canadian dollar is weak. Did somebody mess up here? Right? Go to the 4 hour. And, well, I got this old analysis here. So let's pick a different one. USD CAD. All right, we'll do this one. Change this to a 4 hour. Wow, I have that as support too, huh? All right, well, hang on. Let's do it this way. All right, what I'm looking at is this. Okay? You could even grab these wicks if you want, and that's where we are now. Okay? Could be resistance, right? And let me double check something here. 21 email. All right. I have it looks closer on my other screen over there. Let's bring it back. What I'm thinking is this, okay, this EMA in the future is going to be a little bit lower, right? because it's a falling downtrend. So let's put it about here. Wouldn't it be interesting if we have a scenario like up, right, as you see here, come into this area, maybe down again, meaning strong Canadian dollar, but maybe when the futures markets open in the United States and Americans wake up, because remember, Americans haven't really been trading, they wake up and they see, commodities rallying. Let me remind you, iron ore is up 20% in one day. Where's oil? Okay. Look at this. I have it going up, and then I'm trying to get it a little higher, a little higher, a little higher. So we're tickling 38. So keep an eye on that. If that continues going up, that should be strong for the Canadian dollar, right? So we can go back to that one, or we could do like Kiwi dollar. See, I'm not so sure about the Kiwi dollar. Something tells me they're going to cut. That's a pretty neat little buy zone, actually, though. I already have it marked up. One thing I like to look at is like the oscillator moves, right? So I'd rather it be down here than rallying up, right? Because what's key here? Let's just look at some basics here. What's key? The oscillator? No. Support. So in this case, you get the oscillator at support. Okay. Oscillator. Ooh, you could have skipped this one. Maybe you considered it at support. Pretty close. Okay. Better. So there isn't any examples here. Sometimes what you'll see is it'll be overbought but not at support, and it'll come down early. But I guess either way, if you just paid attention to support, even the oscillator is good. So the thought process now, though, is what if it comes down and then heads up? Okay. I still would like to see the oscillator oversold. Okay. And maybe be long pretty much the same price, but under different circumstances. Aussie, pretty much straight up like a rocket ship. Hang on, that's all headshot. Actually, what I wanted to go over was like Aussie yen. Because one thing I'm eyeballing is this 84 area. I might have missed it. We'll see. Too bad, so sad. Let me put this on like, I guess I have to show it on a 4 hour. Okay, a couple of things here. If you're playing pivot point theory, let's talk about that. If you're playing pivot point theory and this remains the top of the week, I'm not saying it will, but if it does, so let's say we get price action like this. What I'm going to think is down here. Why is that important? That's almost 500 pips. Okay? And that's just simply M3 to M1 on the weekly pivots. Now, as a bull, however, what you want to do is buy a dip. Okay? And a conservative bull would buy, and I'm saying these are ideal situations, somewhere between the weekly and the M2. And that's way down there, 83, 82 kind of area. Okay? So what you would expect is maybe, okay? And then you throw in, you look for support based on old resistance, what I call role reversals. And there's sort of a thing going on down here. Right. That would be the buy zone. Or even way down at the bottom. Right? And then you go to the, oh, I know why, because I don't have the moving average here. Well, let me just draw it then. There's the 21 EMA is, like I said, kind of like 84-ish. So it kind of looks like, I'm looking at my other one, looks like this. Looks like about like that. So one thing that might happen is it does come down to this area and then heads up. If you were just playing this chart the way I have it drawn without the 21 EMA, what you would look for is basically price to fall. Okay. Anywhere in this area is fine. Ooh, come on, drawing tool. Okay, anywhere in this area is fine, and you can see the lower is even better. Okay. And then under this chart setup, a 5/8 cross up. Okay, it looks like it's kissing down. It's a 5/8 kiss right now. But what if you had a cross like that in here? That's where you take it. And in that case, if you're a bull on this, your target's going to be up here. Okay? So you get a slingshot this way. So you just have to ask yourself, what are you, a bull or a bear? And play it properly. Right? The market's not going to tell you. So you're going to have to do your own analysis and make your own plan. I guess if I really want to confuse you, I could say there's a third possibility where it goes up, hits the weekly R1, and then comes down to the weekly S1. And that would be an inside week. Okay? And who knows, like I said, if New Zealand comes in and messes around with their stuff and confuses Asia, then maybe we get a range out of this. That would be a weekly R1, weekly S1. Okay? I call that an inside week. Okay? So pay attention to these levels. Pay attention, even though we're talking Aussie, you know, Kiwi, New Zealand might lower interest rates. What does that mean, Basil, right? It could just change people's thoughts. Ooh. How about this? What if iron ore collapses tomorrow? That's right, Ryan. It means there's no trend. Okay, so if the trend is bullish, okay, let's say last week was up, today's trend should, or this week's trend should be bullish. So down to, right, M2, M4. If last week was bearish, right, I'd look for a retracement M3 and trend it back down to M1. But sometimes we lose our trend, right? And that's where we go, and it ends up being sideways. And that's where support 1 and R1 are usually respected but not broken. Okay? Caught between R1, S1, support and resistance, no trend. Because you only have a trend if you're breaking, an uptrend if you're breaking resistance, or a downtrend if you're breaking support. But what if you don't really do either? Okay. Which just means, it'll cool off early in the week. Maybe there's important news, that kind of stuff. And then it breaks out the following week. Could be a change in trend. Okay. And I guess that's it for today. Watch your charts. It's interesting. Like if you're looking at 4 hours and dailies, we're kind of entering the overbought or oversold areas. We've like I said, when I bought the Aussie yen 3 weeks ago, I bought it at 79 ish, and it's at 84. So that's 500 pips. What I said at the time is I'd be embarrassed if I didn't get 700. And I forget how I came up with the 700, but I think it's just the top of the last move. And so we're getting closer and closer, right? We're like 150 pips away from that old top. And the 4 hours overbought, the daily's overbought. Well, I bought when the daily was oversold, the 4 hour was oversold, and the 1 hour wanted to turn up, and the 15-minute wanted to turn up. And it was a double bottom play. So we're getting closer in the next, let's say, 24 hours, maybe 36 hours. Maybe that old plan from 2 or 3 weeks ago fulfills itself, and we have another move down because the daily will be overbought, the 4 hour will be overbought. Wise guys like me would want to take profit, and and we follow that wave down for a while. So when I look at that on the Aussie yen, I see something similar in CAD yen. I see something, Kiwi yen kind of getting there. I see like Euro yen daily. We're on the daily 21. Did you guys see that? 4 hour wants to come down. We hit the daily 21 and we respect it hardcore. And so did pound yen. We hit the daily 21, turned red. And I'm looking at these things like, well, those two currencies, the European currencies, were never really over bullish. And the Asian currencies or commodity currencies were overly bullish. Well, so if they turn bearish, well, the European currencies are going to turn bearish too, right? And they happen to be at some really good resistance now. And we're finding out that the Bank of Japan's probably not going to do more quantitative easing, nor are they likely to make deposit rates more negative. So, yen strength? Well, wouldn't that just be a darling? Right? Yen strength. But that's Friday. It's Monday. Right? Is it going to take that long, or are people going to start playing that now? And I look at things like, let me just show it before I pull the plug. What looks better? What looks better? Let me do. I guess they're both fine. Let's do Beast. Some of you guys like Beast, right? All right. Okay. What does the oscillator say to you? down, right? But also divergence. Okay. And maybe it starts to get toppish. What? Right? Okay. With divergence, now that looks like a 382 down, doesn't it? And then you go, oh snap. Are you kidding me? Right? Did you rub my lamp? That kind of looks bearish. With 4-hour falling stochastics with divergence off of a 382 roll reversal? So if that starts down and then, I don't know, and then if that stayed down slowly but surely to Friday, and then Friday, no change, no help from the Bank of Japan, yen gets strong, Nikkei falls, oy vey, right? Anthony already got 200 pips out of it. Yeah, it's the funny thing about the yen, right? The beast, I should say, right? Oops, come on, drawing tool. You look at that and you're like, oh yeah, well maybe it's starting to head down. Yeah, you don't realize it's hundreds of pips. Right? You're like, oh yeah, I got that little red candle, I sold off to 21. It's just starting. Just starting, right? And then anybody go to the Maserati store over the weekend dressed up in a nice suit? Negotiating? Anybody take me up on that? See, I tell you, what would 95% of people not do? Remember in Forex, right? 95% fail, 5% make everything. It's a zero-sum game. There's no, right? So when I first started, I asked myself, well, what is it that the 95% of the losers are just, or 95% of the market, what is it that they're just not willing to do? And I would say, you know what? I just want to go crazy. I want to do the things that no one else would do, because maybe that'll put me in the 5%. I'll work harder. I'll try harder. I'll read more. I'll study. I practice. I'll measure. I'll adjust. I'll master scalping and spot trading and swing trading and carry trading and position trading and portfolio trading. I'll just, whatever it takes. Right? You guys did that? So David went to Porsche. Are you guys saying you just recently did it, or because of the discussion we had? Lewis said went to GMC. No, seriously, did anyone do this? So David, you went and you sat in a 911 GT3 because of our conversation? Ryan sleeping in the bathtub. Okay, that's cool. I appreciate that too. David, I hope you grabbed the brochure and stuff. It's nice to take it away so you have it. You're like, I need to do something so I deserve this, right? No one's going to give it to you. Right? You know what I mean? No one's going to give it to you. And if you don't do the work, you don't deserve it. But the way I always felt about trading is that, even though the world doesn't necessarily work this way, I know it, but when I place a trade, I should deserve to be the winner, because I did more work and I have more analysis than if I went long and some guy went short. The guy that did short is lazy, weak, doesn't have a plan, doesn't have patience, doesn't have discipline, doesn't understand the fundamentals, and I'm sorry, I'm going to win. And I just deserve it. And that's how that's how I would earn that car if that's what you wanted to do, right? Right? That's, in the art of war, right? Um, I forget the exact language. Like, an honorable general is in line with the yin and the yang, the heaven and the earth, and the ancestors, right? And an honorable general does many calculations and wins because many calculations were made. It's right out of the art of war. Thousands of years ago, it was known that planning and preparation was usually what made you win, not necessarily the amount of soldiers you have, right? It's hardcore training, hardcore discipline, and ruthless planning. You know what, Marina? Marina says, how many of the students made more than 1,000 pips last year? Actually, quite a bit, quite many. And more importantly, it's not just 1,000 pips, because that's really not a lot of pips. If you can do it in a month, that's an okay month. But it's their first 1,000 pips, and I think that's important because a lot of people they don't even think it's possible. They don't even realize it's possible. They're not even trying because they don't know. Right? 11,600 pips last year for cool. That's a start. And particularly you should ask yourself which months did you make most of those pips, and then ask yourself what did you do during the months you didn't. Not that you should have made pips those months, because remember, if the market doesn't move, you're not supposed to make pips. Right? So what I think a veteran trader does is realize there are some months you're not going to make pips at all, really, not much of anything, and that's when you do want to shoot at rabbits. You want to be income based, where if you make 50 to 100 pips for the day, you feel pretty good. And tomorrow you'll try the same, and the next day you'll try the same. And at the end of the month, maybe you make 1,000 pips, maybe you make 500 pips. But that's all there was, but you survived, right? And then on other months, you should be upset if you made 500 to 1,000 pips. You should be kicking chairs and saying, you know what, I just screwed up what should be a month that I get paid, and I didn't get paid. I messed it up, and I won't get this month back for another year. So there are certain months where you need to kill it. And 1,000 pips in September, October might be pathetic. But 1,000 pips in June or July is a windfall, and you got damn lucky or had just a great trading month, right? And you should identify those and kind of know these patterns ahead of time. When should you celebrate 500 pips profit, and when should you be embarrassed about 500 pips profit? And honestly, if I was mentoring you, by the end of the mentorship, we should really be focused on, you should be trying to earn 1,000 pips a month. Some months it'll be easy, some months it'll be more difficult, but that should be the focus. And sometimes when I say that to an amateur, they just fall out of their chair like, 1,000 pips, oh my God, that's so many. Well, yeah, that's why you need help. So I love you guys. I want you to succeed. I really do. That's why I'm here every day. Yeah, Rick. Well, see, Rick, we can work on that. That's Rick says he gets out of his winners too early, um, or so you think. But there are ways to work on that. It's now it's no longer an entry issue. It's a risk management issue, and very often it's a psychological issue as well. And there are several things that can be done to try to figure out, the quality of your trades and where you should get out, or more importantly, maybe you should be building portfolios, right? Because a portfolio trade um, is when you never take profit. I was thinking, I have two book ideas in mind that over the years I thought, if I wrote another book, one is, how to be a professional Forex trader and manage money, raise money, all that kind of stuff. That goes all the way back to my venture capitalist days where there's lots of overlaps. But then there's this other one, and I thought the title would be something like, never take profit. And one way to address your issue, Rick, of getting out of winning trades early, never take profit. It would never be a problem. I didn't say lose money, just absolutely never take profit. And I'd have to explain on that, right? No, Marina, but that's interesting. Using a 12-hour chart. Interesting. Many years ago, I sent an email. As you guys know, like I sent you guys emails about Dubai. I'm going to be in Dubai. Whether you come or not, I'm going to be there. I'd like to hang out with you. Let's do a seminar, all that kind of stuff. But many years ago, I was in New York. I think I was doing like a TV show or something. And I just fired off an email. And I'm like, hey, guys, I'm going to be in New York. I don't have any time really. But I have three hours or something like that after my TV appearance, and I'll be in New York before I have to leave to catch a plane. So I'm gonna, I'm a member at Nat Sherman's VIP room. So I'm like, if you want, meet up with me, and I'll buy you a cigar. Sure enough, like 15 people showed up. 15 people. I don't even know who these people are. They just showed up. They're waiting for me outside. I'm like, and they're like, hey, are you Wayne? Uh-huh. Oh, yeah, we're Forex traders. Oh, all right. Nice to meet you. 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 Hey, let's all go down to the VIP room. By the way, everybody, let's meet the owner. He'll help you pick cigars. And sure enough, so we all meet downstairs in the VIP room. We're smoking our cigars and having a good time. And I'm talking to, I think, 3 people. And they're like, Wayne, we're going through a losing period and we're having difficulties with this. And I said, oh, well, tell me about your trading style. What do you do? And they used 10-second charts. Every 10 seconds, a new candle. So Marina's talking about 12-hour charts. Oh, yeah, okay, interesting. It's sort of like a 4-hour chart mixed in with a daily chart. I get it. It might be interesting. But there was going like every 10 seconds a new candle. Yeah, no joke. And I said, well, how are you doing? She's like, well, I lost like $30,000. Oh, I couldn't. I was holding my belly. I was laughing so hard. So anyways, we became good friends. But yeah, we did become good friends for a very long time. But I'm like, wow, we got to work on that. So I think I'd rather take the 12-hour chart and play with that than the 10-second chart. But she signed up for some group that was pitching some sort of thing, and that this was the way, and apparently planning and analysis had nothing to do with successful currency trading, I guess. So anyways, I'd take the 12-hour over the 10-second. So anyways, guys, it's a big day. We got a big week, so You know, don't exhaust yourself. Peace on earth. May the pips be with you. May our profits be above average. And hey, I'll be here tomorrow. Will you be? This is my desk. Think about getting a new chair. I keep looking at chairs. Need a new chair. My body's beat. What else going on? That's about it. Trade, 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 trade. Can't wait for Thursday. Remember, it all gets set up on Wednesday. A lot going on. It's going to be a good week. So I'll be here every single day. Peace on earth. May the pips be with you. May your profits be above average. See you tomorrow, guys.